Happy Friday, traders. And it is definitely a happy Friday for those traders that have been long crude this week. Overnight crude, huge move, up almost 7% in one session. And crude this week is up a whopping 15%. So now we are back above $90. We're pushing up towards $95. And obviously, the next psychological target and level that the bulls are looking at is $100. So let's see how fast we get up towards those levels. And look, obviously, why this is happening is because of the geopolitical crisis in the Middle East between the US and Iran just keeps escalating further. We've heard from Trump overnight that he is considering and days away from a new military strike that will be bigger than the epic fury at the beginning of the war. We know that Iran has been super stubborn, and they basically have said to the US is that if they did do something along those lines, then they would return exactly will fire to the extent of what the US has done. So, look, the big issue is whether or not energy infrastructure does get targeted or does get destroyed. And obviously, in this sort of escalation, that is a definite, realistic possibility. Forget about crude at $100; it will go straight through $100. And potentially, if this happens on the weekend. It could gap above on Monday's open. But yes, look, levels back up to towards the highs that we saw during the initial part of the war at $120 are certainly in play. So look, at the moment, certainly, look, would not be fading any of these levels in crude. And if anything, bias is staying long and basically buying any sort of dips that you get. So look, what does this mean for other markets? So look, we've had a big move in bond yields. So obviously, what crude is doing is inflationary. Bond yields, the biggest mover for bond yields is inflation. So now US 2 yields, they've spiked above 4.3%. They're at 4.35. Fed funds rate is at 3.5%. So we're pushing almost 1% higher than where the Fed currently is. If we look at US 10-year yields, they now are at 4.7%. That's the highest that they've been for about 1.5 years. And so top side, what are we looking at? 5%. If those bond yields do go towards 5 and make a run for 5%, it is going to impact all markets. It is definitely a huge negative for markets, the global economy, and certainly we will see some very aggressive risk-off trading. So the key two markets to watch at the moment is obviously what is happening to crude and what is happening to bond yields, because both of those together certainly can impact every single market, and obviously in a very bearish risk-off way. So if we look at equity markets overnight, US equities, S&P, and NASDAQ. NASDAQ was down about 2%, S&P down a little bit less, about 1.5%. Look, they are still at very elevated levels, not far from record highs. So I think for what has been going on, the sell-off in US equities so far is probably best described as subdued. They could go a lot lower. So look, I wouldn't be rushing in and buying any dips. And I think bias at the moment certainly is on the short side while this is all going on. If we look at the USD, obviously USD follows what's going on. US bond yields, so DXY has had another decent rally overnight. We're pushing back up towards those 2-year highs. So bias again there is obviously being long USD. Dollar yen, wow, pushing to 164. The Japanese have got a massive problem. High crude, weaker yen, they are paying huge amounts now for crude, and they import pretty much 100% of their energy. Look, we've talked about it. The market knows at some stage intervention is coming. I mean, we're one big figure away now from 165. Is the line in the sand there? Let's see, but certainly, no doubt, it is a big concern what is going on there in dollar yen at the moment. New 40-year lows for the yen. As far as precious metals are concerned, yes, they got smoked overnight. We've talked about it, all week in the market updates that not to chase the rally that we've seen in gold and silver. For the simple reason is that obviously if crude oil keeps going up, it takes up bond yields, takes up USD. Both of them weigh aggressively on precious metals, and so yes, we've got gold opening Asia here at the moment around about that 40-50 area. Yes, 4,000 has been good support, and down below the big level that we've been bouncing off is around about the 39.50. But again, if you're trading gold, you are trading crude oil. Crude oil keeps going up. You buy gold, it's not going to work. So yes, I'd imagine we will probably see lower levels coming into the weekend. The simple fact is that yes, we mentioned it. We have gap risk on weekends. So I'd imagine market probably isn't going to be taking crude lower into the weekend. So I'd imagine there's going to be a bid. In the last 2 weekends in a row, we have seen, negative headlines and escalations happening on the last couple of weekends. Crude has gapped open higher, and so that is obviously the big risk going into the weekend. But in any case, look, we do have very dangerous markets at the moment because of obviously how aggressively crude is spiking and what is happening with bond yields. So certainly you really need to be aware of that and be cautious. But it looks as if certainly we're probably going to end the week seeing markets trade risk off. Anyway, good luck with your trades, and we'll check back in with you next week.